Hang Seng sitting with cuts of 1.5%.
They're looking to offload almost 4.5% out of this total stake. And with this, they're looking to mop up close to $215 million worth of funds via this particular block deal.
Blackstone is a great partner. They are very good, employee-friendly with their other portfolio companies.
First tick on the index, down about 54 points on the Nifty.
Earnings expectations have actually perhaps not been kind of beaten in this particular quarter's earnings.
Our growth that you will see in the revenues will be a mix of both domestic and exports, always.
Phase 1 of their lithium-ion cell plant will start by the second half of FY25. They expect production to stabilize by FY26.
Just down about 0.1% on the benchmark indices.
Prices have been cut by around 300 rupees per ton. That's both on lumps as well as fines.
LinkedIn sort of has the following data point, right, which is that there are more jobs that are software engineering jobs outside the tech industry than in the tech industry.
We are seeing some amount of an intraday recovery as we speak, so we're off around 100 odd points.
Well, that was a day so far. You're with us here on Closing Bell, and it's an all-boys team which will take you through the last 60 minutes of trade. I'm Prashant, Nigel is here, Mangalam is here. It's going to be fun, guys.
It's a full house.
It should be. So, absolutely. I mean, absolutely quiet day. So, that's why we've got Mangalam in, right? Yeah. It's a quiet day, so we need some fireworks.
We need some fireworks. I wish I could be the fireworks. Well, what can I say?
But for the third or the fourth day now, it's not, the market's not doing very much at all. Actually, the range is even tighter. From the high to the low point of the day, it's just a 55-point range. That's it. Mid caps and small caps are down between 0.25%, 0.5%. Market breadth, consequently, of course, is lower, more declines as compared to advances. The only sector which is in the green in any meaningful fashion is the PSU bank space with about a 0.5, 0.6% gain. That's it. Otherwise, it's sideways. And I think you just have to look at social media, Twitter, etc. People complaining nonstop about how boring the day so far has been. But don't rule out a last hour move. We've seen that day before yesterday. We saw a little bit of that yesterday. Will we have something similar today? That is the question. Guys, hi afternoon.
Well, afternoon. It's going to be an exciting final hour, right? In cricketing parlance, you had a quiet day. Maybe, in fact, the final hour throws up some fireworks for the time being. The Nifty is as quiet as can be. Remember, today we have weekly expiry as well, so that will play out, and a couple of strikes are very, very active. It appears that the range we're looking at, the broader range, is on the downside, 18,350 to around 18,450 odd. Take a look at the open interest build up. The 18,350 put, the 18,400 put as well. Massive open interest build up out there. So for the time being, the bulls believe they have this in the bag. That 18,350 mark is not going to break today. At least going by the data, that's what they believe. On the upside, though, that 18,400 call, well, that's seeing a lot of open interest build up. And there's some mixed action happening out there. At the start of today, the premium out there was around 60 rupees. That's come down to around 10 rupees or thereabouts. So on an average, you're counting on that 18,430 odd. That will be a bit of a stop loss for those writers out there. So we'll have to keep an eye out on that 18,430 on the upside. On the downside, 18,350. Let's see how this plays out. For the time being, though, the bulls and the bears, they are in quite a bit of a fight. But let's see how the final hour goes, Mangalam.
Yes, we'll have to watch out for that. There has been a bit of a tug of war around that 18,400 mark for the last couple of trading sessions. What really stands out, though, for me is that the mid-cap index continues to underperform. Today as well, as we speak, even as the Nifty is meandering around that 50, 60 point range today, the mid-cap index is down by almost 1/3%, and it has been underperforming. As we speak, there are a bunch of stocks which are not doing too well. Coforge is at the low point of trade, but a bunch of stocks which are actually doing well as well. We had positive commentary coming in on the hotel industry by Patanjali Keswani this morning, and Indian Hotels is picking up after seeing a bit of a drubbing post their results. And then we do have a lot of these PSU banks that Prashant spoke about doing extremely well as well. Union Bank, case in point. And some non-F&O cash stocks that I'm looking at, TeamLease is one of them, up 7%. Management joined us yesterday and they said that, they're targeting 31% revenue growth this year. Margins are likely to improve. So after a bit of a drubbing, that stock's come back too. And finally, Godfrey Phillips is the other one that I'm looking at as well. This month, it's up 23%. And now, after this month's move and after today's move, it's actually outpaced ITC from the start of this year in terms of a move itself. And if you just take a look at a comparative chart of both Godfrey Phillips and ITC, you'd find out that Godfrey Phillips was an underperformer for most part of this year. It's just last 2 months, as you can see, it has moved higher, and the results, the company has them to show, 24% cigarette volume growth. So they've done well this time around. Let's see how that pans out.
Well, I think that makes sense, Mangalam. We should actually pull up a chart of both these two stocks year to date. You'll see the way Godfrey Phillips has come back. In the last 1 month, it's up close to around 40%. And that's telling you the kind of move that you're seeing. Brilliant. Just take a look at that. The Godfrey Phillips took off somewhere in September or thereabouts, while ITC has been going well from the start of this year, made a bit of a peak at around 360. And from there, we're seeing some bit of selling. But plenty lined up for the last 60 minutes. So first up, let's run you through what we have lined up on the show for you. The markets trade mostly flat, with the most sectoral indices trading in the red. Important opinion coming up from big voices. We have Tahir Badshah and a couple of other experts who will be joining in to run us through their take on the market. Tata Motors as well as Paytm, they're under pressure following news flow. All details lined up on why those stocks are struggling today. And finally, we'll be joined by our Alpha Manager of the Day, Gautam Sinha Roy of ICICI Prudential Life Insurance, to discuss the portfolio bets later on. All that and more in the final 60 minutes.
Okay, so a lot lined up here as always. How should you position yourself in the last hour with these flat markets? That's the question. Mitesh is with us to answer exactly that. Mitesh, hi, afternoon. What would you do now?
Afternoon, Prashant. In fact, we've kind of pruned down our long positions purely because of the fact that on the hourly and the 2 hourly charts, there is some loss of momentum. While the market has been sideways, typically, I think, we've not seen in the last few weeks that the hourly indicator should start dipping, which has happened, which means that this consolidation could either go slightly longer than what we anticipated in than what we anticipated a couple of days back, or we might actually see a correction of profit booking at kind of a pullback also, which could see the index head towards 18,250, 200 zone. So we've taken some profits off on the long side, now trading with slightly cautious bias on the index, and unless until we see the beyond 18,450, 460 levels, I will not be aggressively long on the markets for the time being and wait for the dip to enter. Having said that, I have a buy and a sell call. The PSU banking space continues to outperform, and Union Bank is the stock which has given a breakout in the last 2 hours, so that's a buy. Keep a stop below 67.5 here and look for targets of around 75. And Dixon is a sell with a stop at about 44.60 for targets of around 4,300.
Mitesh, just want to check the chart of InfoEdge. It had a good month, but suddenly it's come in for some selling. That one, in fact, was doing pretty well, actually, post its numbers. I recall the stock was up close to around 4-5%, or even on the result day did pretty well. But today, suddenly that stock has moved to the day's low. On the charts, how's it looking?
Nigel, it had very good 2 sessions post the numbers, and then it hit levels of around 4,400, which is where there was a big gap, in the month of August, September. I think that supply came in. Overall, it still looks like a stock which will do 4,400 on the upside to about 37.20, 37.50 on the downside, and not give you a directional move. So I'll try to buy it towards the lower end of the range, take a 50-point stop from there, and closer to 43.80, 4,400, try to exit.
InfoEdge at the low point of trade, while Nykaa has moved to the high point of trade. Nykaa actually has recovered almost 9.5% from the lows of today, and has moved into the green, comfortably into the green. But one stock which is under pressure is Paytm, as a pre-IPO investor has sold a large chunk as soon as the lock-in period ended. Who is that? Nisha Poddar joins in with those exclusive details. Nisha.
Thanks for that. Yes, sources with direct knowledge have shared with us that SoftBank, which is a large investor in Paytm, has sold down 25% of its holding in Paytm with the block trade that was executed right after the pre-IPO investors' lock-in period for Paytm ends 1 year after their listing, and they've sold close to 5% stake, and remaining 13% stake is still with them. So the entire trade was worth about 1,800 odd crore rupees, and that's what SoftBank has taken away, with 555 to 560 rupees per share average selling price. Now take a look at it into perspective. Now 13% odd stake which remains with SoftBank cannot be sold for 60-day period as per SEBI norms. It has a lock-in period, and therefore that particular overhang does not stay with Paytm, but there are other investors who may be also looking at selling down. On the other hand, 830 rupees is what they had bought this at, so it's a huge loss at which SoftBank has really exited a part of its holding in Paytm. And when it comes to the investors, the top 5 investors that include Norges Bank, Gazalo, as well as Millennium and some of the others, these are the top 5 five investors, which are long-only funds, crossover funds, which have bought the majority of the book which was on offer. And remember that from a $20 billion equity valuation at which Paytm had listed just 1 year back, the shares have been sold at $4 billion valuation. So the new investors are looking at an upside from here on, and also looking at the execution capabilities of the founder, VSS, of Paytm.
Okay, all right. Thanks a lot, Nisha, for joining in and giving us all those details. Well, not such a soft landing for SoftBank. In fact, it's quite a hard one, the kind of loss that they've taken on that one. Deven Chauksy joins in. Deven, you've told us in the past you're not a big fan of these new age companies. Any view on Paytm, though? At this price, 540 rupees, a company that listed close to around 2,100 rupees 12 months back. It's still not offering value, or do you believe at some point of time you'll be interested?
Yeah, Nigel, good afternoon. Well, I do maintain that as a customer, I think new age companies are a delight, but as investors, they are not. And I think that is a fact which is now proven. Most of these companies would struggle for bringing cash in the balance sheet. And I think that is what the situation is currently happening. Up till now, they were funded for cash burn. Today, I think the investor is asking them how do they generate a free cash flow. So there is a complete contrast, I think, which has already emerged into the system. And given that kind of a situation, I don't think that I think it is very easy for somebody to basically, I think, take a bet on this kind of businesses. The company and the business which is loss making, which does not have the visibility of, I think, making the profits. And I think the other important aspect here would be that at such point of time, I think these kind of businesses would become some kind of a strategic fit for some other companies who are basically looking at the last mile connectivity on the payments, etc. I think they could possibly buy at a throw valuation. Currently, still it is around $4 billion plus kind of a valuation at which I think it is quoting at. I think unless it becomes a very meaningful kind of a valuation, a compelling one for some of the larger companies, I think, who could integrate themselves into the business of this fintech, I don't think that immediately there is an answer available for anybody whether they would get an exit after buying into this stock. So clearly for other investors, I think one should stay away. Those who want to take bet on the possibilities, they might possibly hang on to it given the kind of a possibility that it may have. But as I said, I think the price will have to be a main factor. If it is at current valuation, I don't think that immediately it can excite anybody to get into the stock.
Well, it's much lower now. It's down 10% as we speak. It was struggling with a cut of almost 8-9% through the course of the day. But now as we move towards the business end of trade, it has only accelerated on the way down. Devin, hang in there. We'll speak to you about Tata Motors. You've liked this stock X its JLR business. But now it's the JLR business where problems continue, because now the latest is that the CEO has resigned. Sonia joins in with the details on that. Sonia.
Absolutely. This is a big disappointment coming in for Tata Motors, because the CEO of JLR has resigned at a time when Tata Motors was undergoing a transformation phase, especially for the JLR business. It also comes at a time when the JLR business is struggling a bit given the challenging macro environment. So as you rightly pointed out, the CEO, Thierry Bolloré, has resigned with effect from December of this year. He was the CEO from 2020. So for the last 2 years, he was very instrumental in the transformational journey of Jaguar Land Rover. Now, Adrian Mardell will be taking over as the interim CEO of JLR. And as I said earlier, JLR is going through some problems at the moment, whether it's the weakness in earnings, where the EBIT margins in this quarter had gone down about 230 basis points quarter on quarter. There's a negative free cash flow that the company reported, citing adverse working capital environment. Given all of this, the resignation of the CEO and no clarity on who the new CEO will be is something that is spooking the street. Not just that, the stock has already underperformed the market quite a bit. It's down 15% this year, and hence all eyes will now be on when the new CEO will be appointed and who it will be. Up until then, there could be some uncertainty on the stock. Back to you.
Take that point right back at you. Devin, you said that JLR is a bit of a trouble spot, but X of that, if one maintains their confidence in Tata Motors, they are continuing to do well in the non-JLR part of the business. But now with these problems coming by for JLR, incremental problems, would your confidence be shaken?
Well, I think if I have to look back, I think of last 2.5 years of, I think, the CEO, probably I think he has delivered for what he was brought into the company. And he was brought into the company for cost reductions in JLR portfolio. I think last year it was somewhere around, I think, if my numbers go right, I think somewhere around 300 million pounds. And I think this year it is going to be somewhere around cost reduction of around £1 billion. So if this is the number that he has already delivered, then I think the next big move that the Tata Motors can think about is, I think, managing the logistic part of the business on supply chain side. I think if that gets sorted out, probably I think there is enough amount of room for the company. On the other side, I think the business condition still remains, I think, challenging, but it is improving at the same time. JLR has made, I think, an announcement that by 2025 they are getting into the electric vehicles completely. So from that perspective too, I think there should be a transformation journey which will continue. In my viewpoint, I think the new CEO being looked out by the company, Tata Motors, I think would be with a mandate clearly to position the company into the electric vehicle space. And given that situation, probably I think there cannot be further worse than what it is at this point of time. Also, domestic front, I think passenger vehicle, commercial vehicle, as I said before, I guess I think they are doing phenomenally well now, I think, than what they were before. So all in all put together, I believe that I think Tata Motors, I think, has a relatively strong outlook comparatively, given the kind of corrections which have happened into the balance sheet, repairing of, I think, the financials, etc. I would remain relatively more positive than otherwise.
On the conference call after the earnings, the CFO of the company, I mean, the CEO, of course, of JLR has just resigned. But the CFO apparently made a comment saying that we were 2 weeks late in going to, I don't know if he meant the buffet or buffet. In search for semiconductors. I mean, it's a strange confusion to have. One needs to listen to the commentary because I read the transcript. And many are making the point that maybe it's essentially an internal kind of failure to source enough semiconductors, etc., which is kind of made them fall behind, right? I mean, because semiconductors, etc., have been hard to come by. But Buffett has 2 T's. Anyway, I mean, that's a...
Who was the person transcribing that conference call?
But it's on the exchange. You can go and see. And I was talking to somebody this morning that you should link it with that comment made by the JLR CFO. So perhaps this entire resignation has to do with failure to secure semiconductors. But we'll come back on that. Buffet or Buffett. We'll take a quick break here. We'll come back but in the meanwhile, we'll play you some important opinion. This is Morgan Stanley's chief economist. I mean, one of the top economists at Morgan Stanley. My colleague Lata spoke with her on what she thinks the Fed's future policy path is going to be and more. Listen, and we are back with more.
Because inflation is still high, even though you set it on a downward trend, you might want to hold rates there high for longer. And she is not the only one that believes that, hey, we're holding rates higher for longer, but inflation is still going to be falling. Therefore, real rates are rising throughout the year. And that's something that's going to be very difficult for the markets to embrace because it's in theory, right? In theory, real rates are still rising. And so you're not doing anything, but policy is getting tighter. We do have a forecast that although it remains high, that it is gradually coming down next year. And I think we've seen a lot of evidence on the ground of that. Effective rents have been falling since the fourth quarter of last year. It just takes a while for that to show up in the actual data. Vacancy rates are up. There is, as economists, we're trying to forecast what the BLS is measuring because they put out the official numbers, and that's what the Fed follows. But Chair Powell spoke to this a little bit at the last press conference and said, but we're going to follow the official data, and the official data hasn't really shown weakness yet. But we think that weakness is creeping in there. We think that it's going to be coming down next year. But that's very sticky domestic side of the economy. I think of 3 pivots here, right? The first pivot, the market's already priced in, that they're going to slow the pace, and they've already communicated that. The market's embraced it. They're going to raise rates 50 basis points in December, and we think another 25 in January. So that was the first pivot, just a slow. The second pivot is when do you stop, and then the third is when do you cut. So that second pivot, when do you stop, you just, Chair Powell's been very clear, laying it out. We need to see a broader impact on the economy that our interest rate increases are having an effect. And so that is slowing consumer spending, but importantly, the labor market.
Well, 18,400 is here on the Nifty. We are seeing a wee bit of recovery, and that's perhaps on account of a bunch of stocks. Pull up something like an ICICI Bank that has a bit of a weight on the Nifty as well as the Nifty Bank, a larger weight on the Nifty Bank. That's moved to the high point of trade, and that's actually the one which has taken the Nifty beyond that 18,400 mark. But important news coming in. Equitas SFB has gotten an RBI nod for acquisition of 10% stake, 9.99% stake by DSP investment managers in the company, and as a result of which there has been a sharp spike on the counter as well. But before going into break, Prashant, we were having this discussion about whether it was buffet or Buffett in the Tata Motors conference call. I got the transcript up, and I think it was buffet, the food buffet, because I read from it, and the CFO has said key priorities, of course, are chips, chips, chips. And I think there was a wordplay on that thereafter, because he said that we were behind the clock. It's like turning up to a buffet 2 weeks late. Some of the stuff which is left isn't what you want, but you're breaking through this, and we're working tirelessly, working in the right direction. So it's not Buffett, perhaps it's buffet.
Thank God for that, right?
Thank God for that.
But I mean, thanks Mangalam for that. But it's a startling, almost a confession, right? Saying that we were too late to get on the chips bandwagon. And people are making the connection that maybe this resignation at Tata Motors, of course, has got something to do with that. Najee, you want to say something?
No, just, we're looking at this Equitas Small Finance Bank because of this flash that's coming in there. But also, if you pull up the Equitas stock, that's the one that holds a stake in the Small Finance Bank. That as well, from the low point of the day, has seen a good recovery. So Equitas Small Finance Bank recovers up close to around 7%. And that one as well following suit, because it has, it's the largest shareholder in that listed entity as well. So just want to highlight the fact, both of them taking off. Devin Chauksi is still with us. Devin, any view on this, Equitas Small Finance Bank or Equitas? There was a bit of an arbitrage that was available earlier. That's been playing out. Your take?
So Nigel, I think while looking at the business, I think probably in the lending business, we are more convinced to buy today some of the larger financial companies, the NBFCs in banks also. Largely because of the fact that I think the requirement of the credit lending is increasing. And I think from a perspective of looking at, I think the higher amount of participation for the organization or the institution, I think into the corporate lending side or even retail lending side or even priority sector lending side, I think larger the size of the EM, better it would be. If some of the smaller banks or the smaller financial institutions, I think, are giving microcredits, I would think that I think they have a relatively, I think, challenging environment, particularly in managing the liability side going forward. And that's where probably, I think, the unsecured loan that they give, I think, would come into some amount of pressure at some point of time always. So given those kind of challenges and given the opportunity that you have as a country for the larger growth, I would rather like to put money where I think the size of the EU is bigger and the ability to lend is larger.
All right, Devin, we'll leave it there. Thank you very much. We'll have more details on this one in terms of the transaction, etc. on Equitas in a little bit from now. But thank you very much. Gautam Sinha Roy is Executive Vice President and Fund Manager at ICICI Prudential Life Insurance. Gautam, good to have you with us here. Thank you very much. This news on Equitas is coming in now. Approval from the Reserve Bank for DSP to be able to buy, just under 10% in Equitas Small Finance Bank. I don't know if you have a view, on the sector. If you do, would be good to get that at this point in time.
Yeah. Good afternoon, gentlemen. I think the sector view broadly remains positive because we are seeing credit growth in the high teens, NIMs are expanding, credit costs are benign. So we have all the parameters for financials, especially the lenders, which are lining up in a very robust way. ROAs are improving year on year. So the good part is increasingly we are seeing even the smaller financiers and the ones which have been beaten down earlier, they're coming back into the fray and they're doing better. So that's a very healthy sign, I would say, not only for the sector, but for the broader economy too.
Okay. Right. All right, Gautam, just hang on to that. Just looking at the shareholding right now, in Equitas, that's Equitas Holding Limited, out there, DSP Mutual Fund have close to around 8.5% stake. That's in Equitas Holding. And I think they also have a stake, in the other listed entities. So I think post-merger, I guess, we're still waiting for further clarity. But effectively, I think what it means is Now, post the merger or whatever, they are being given that approval. That's what it appears like as of now.
Which is why the stock is also off the highs, because what it appears, I'm reading just from the letter, it says that the proposed acquisition of shares by DSP IM would be consequent to the scheme of amalgamation of Equitas Holdings, which is the holding company, with the bank taking effect. So it is no fresh investment which is coming in. You hold about 8.5% stake in the parent. You hold some stake in the entity which will be amalgamated. Yeah. So together they will hold about 9.99% stake in the company. And I presume it is something of a regulatory requirement for an institution to hold 9.99% stake in the company, which they have gotten now. So it is no fresh capital coming in into Equitas Small Finance Bank, is what we understand so far. It's just a regulatory nod that they've got.
A single entity in a bank can only hold max limit is 10%.
Yeah, so 9.99% is what it is.
That's the approval that they've got. But we're waiting by. Abhishek will join us in just a bit and give us further clarity. Our team is working on the details in that front. Hi, Gautam. Good afternoon. Sorry we had to come in on that. But, what about the markets? How are you approaching it? We have had a dream run. We're dancing away every day that, in fact, we have been the big outperformers in 2022, decoupling, etc. Are we getting over-optimistic? Is it time to get a little bit cautious?
Well, yes, that's the big debate, Nigel, in everybody's minds. That, touch wood, we have been such big outperformers compared to the rest of the world. How long does this last? I think much will depend on how flows shape up from here. Because if you see the course of this year, either domestics have been buying or FIs have been buying, right? Either of the two at least have been biased at any point of time. So we have been really lucky in that sense, right? So I think the focus from here on would be on flows, both domestic into equities as well as the overseas FI buying. Because if both soften at the same time, that is where the correction will come. And one can expect that to happen at some juncture. One can expect that to happen. But nevertheless, I think Ps have corrected for a large chunk of the market. I think the P dispersion that we were seeing, let's say in December 2021, where certain stocks were very expensive, certain ones were quite cheap, that P dispersion has reduced dramatically this year. So there has been some correction in the market. It's not that everything has been hunky-dory. The index levels reveal something. They also hide a lot of things. So we should not go just by the index levels. But I would also think that if there is a meaningful correction from here, because of the flows particularly, that would really be a good buying opportunity. That would give us a decent buying opportunity because of the simple reason that India continues to be one of the fastest, large, growing economies in the world, right? So that's a very unique position we are in, given our size, given our growth rates, structural growth rates, which means that the opportunities for stock picking will abound if valuations really correct from here.
All right. A bunch of these mid and small cap names are doing extremely well. Some of them belonging to the PSU space as well. Dredging Corp, for instance, a big surge is what we're seeing on that counter up at the high point of trade. Most of the gains, in fact, have come by in just the last few minutes. Or there you have it, a vertical spike on Dredging Corp. And the other one, which is doing well, is Cochin Shipyard. In fact, Cochin Shipyard has been one of the big outperformers of this year, up 91% for this year itself, along with a lot of the defense names which have been doing well. Gautam, in the past, you've liked a lot of the small and mid-cap manufacturers, so to say. Can you nudge us in what direction are you looking at, or what direction one should look at when one is looking at these companies? Because over the last month or so, we have seen the mid and small cap stocks actually underperform as against the index.
Correct. That's absolutely correct. So I would say that one should be conscious of valuations in this juncture, because what we are seeing is for growth companies globally, valuations are correcting. Keeping that in mind, if you get the correct valuation, the growth areas are in some of these manufacturing companies. This is largely because of the PLI schemes and the nudge from the government for domestic manufacturing. That should remain a decadal theme, I believe. At least from where we stand today, the visibility of that theme continuing is pretty robust. So these remain good long-term structural opportunities at decent valuation. They should be looked at into. But again, that theme of valuations of richly priced companies correcting is a omnipresent theme today in the entire world, and that probably is dictated by the cost of money going up because of the US Fed rates and the US inflation levels creating expectations of future interest rate hikes. So that construct has not changed, honestly. Maybe we are towards the fag end of that construct completely playing out, but at least for now that remains. So one should be very conscious about valuations in terms of taking their buying decisions in this current context.
And we've had enough of these disappointments, right, Gautam, in the quarter gone by, in large caps, mid caps. You know, take Campus Activewear as an example, where earnings missed big time, and other footwear stocks as well. But that's just one area. We had many others, and these were all very highly, richly valued companies. Yeah. And the price damage in a short time span has been significant. Are there these kind of landmines spread all through sectors, even in manufacturing? I mean, while long-term growth prospects are great, but these are also sectors which have done well.
So yeah, that's a very important point, Prashant. You know, we have discussed this in previously too. If you just step back into the end of 2020, right, the extrapolation of growth that was happening, probably because of open up, probably because of multiple other reasons, was great, right? People were just extrapolating that growth into the future. The growth expectations from the broader market, and I'm just not talking about specific subsectors like footwear, that also is true, but I'm seeing that broader growth expectations were pretty high. Now, if you look at the entire market, I think that financials is one sector which has lived up to expectations. The lenders have actually, many of them have beaten expectations very handsomely. But if you look at X of lending, there'll be select consumer durables where expectation would have been met, or retail stocks, hospitals, some specific sectors where, of course, expectations have been met or beaten. But on the other flip side, there have been a slew of sectors or stocks where expectations have been disappointed, and sometimes massively disappointed. And that is where you're seeing the very, very sharp price correction. That's why I'm insisting that this is a market where you have to be conscious about valuations. And of course, you always have to be conscious about growth, right? If you get your growth call wrong, anyways, you're going to suffer. But today, the growth disappointment is compounded by valuations correcting very sharply in such stocks, even if the long-term growth construct is good, as you rightly pointed out.
Okay, all right, Gautam, thanks so much for stopping by and filling us in with your view on the markets as well as a couple of industries that we discussed. Look forward to chatting up with you rather soon. By the way, keep an eye out on the index. Well, the Nifty bank that is otherwise trading in the green, that's come off a little bit from the top. That 3 p.m. move, nothing really major is what we are seeing. But the Nifty has moved a little bit lower in the last few minutes. So just keep an eye out on that front. HDFC, that's the larger name in there. That's moved to the low point of the day. So pull up the intraday chart on HDFC. That's the one that's moved a little low as we speak. For the time being, we'll slip into a short break. But as always, on the other side, our technical experts will be back with us. Welcome back. Well, the markets are holding more or less steady at around that 18,380 odd. But Mitesh is back with us. Mitesh, what do you made of today's market action? It's been kind of boring, actually. Last couple of hours, the markets have barely moved. But there'll be individual stocks that you're tracking, which is giving some bit of an opportunity. So run us through that.
Exactly, Nigel. I think that's the space to focus upon. I think the index is very, very flat. Even the bank Nifty hasn't moved much. But the PSU banking index, we had Union Bank earlier. I think that's the kind of space you want to focus upon. So right now, I have a buy on Exide, and both Amar Raja and Exide have been doing very well. So Exide is the BTST with a stop below 185, a target of 190, 191 for tomorrow, I think looks likely. And Indus Tower is something which is breaking out, reversing from the lower levels as well. That's the BTST. Keep it stop below levels of around 195 here and look for targets of 202.
All right, a bunch of these real estate stocks are also picking up now as we speak. Macrotech development or Macrotech developers, the Lodha builders as we know them, has recovered a good 5.5% from the lows as we speak. Phoenix Mills is the other one which has seen a bit of a recovery from the lows as well. Mumbai-based companies in particular are doing better than all the other real estate companies. So there you have it. Phoenix Mills was in the red for most part of today's trading session. Any of the picks in the real estate pack, Mitesh?
Not really. I think, in fact, on the housing finance side, we had a sell on India was housing today in the day, but Phoenix Mills, if you look at the chart, it's been doing a range of about 210-15 on the upside, about 200-195, and I think it's breaking out of that range. So that still looks a better bet. The setup on the indicator side is also good. So this one can be bought with a stop just below day's low of 212 and look for a retest of recent highs of 240 at least.
Which one is that you're talking about, Mitesh? Which stock?
Phoenix Mills.
Phoenix Mills.
Yeah, that's right.
Well, it's interesting because the one that we
I think I think I got the stock wrong over here.
Yeah.
Go ahead.
Yeah, because it's currently at around 1,500 rupees.
There's another Phoenix stock I think which is listed. Sorry, guys. Apologies for that.
All right.
Okay, all right. Thanks for that, Mitesh. We'll come back to you before we wind up trade today. By the way, the markets have slipped a wee bit. Are we going to go down and test that 18,350? For the time being, the positioning is such that we'll protect that level. 18,360, 18,370 odd. Mayuresh Joshi, Head Equity Research at William O'Neill joins in. Mayuresh, well, you've joined us at a time when some of these Mumbai-based real estate companies, they're taking off. What's your sense? Interest rates are going to go up.
Yeah.
My dream home is getting more and more expensive, so I'm not going to buy it. But on a serious note, David, how do you approach these stocks?
Nigel's dream home, I think Mayuresh, don't get taken in. Nigel's dream home is not a home. It's a, I think it's got size on a palace, right?
It's a penthouse. It's I presume. What do you need? A swimming pool in your house, a lawn, a nice view from the top of the terrace. Maybe you can just chill, watch the hills and all of that.
Yeah, and this is Mangalam who's been to my home. Huh? It's one of those Mumbai-based homes where you enter and you can see the entire home. I don't know about the swimming pool at all, but aapke muh mein
ghee shakkar laddu.
Let's hope it's someday. But Mayuresh, let's hope that does happen. Bangla, we've got me excited. Mayuresh, what's your sense on the on the real estate space?
No, so two ways of looking at it, Nigel. I think one, at the time of the lockdown, I think with stamp duty reduction, so on and so forth, I think a lot of fence sitters moved in significantly and aggressively into real estate as a space. So work from home, so on and so forth, created huge triggers for the industry as a whole. I've been reading through a few reports of stamp duty registrations across the country. And again, Mumbai, to a certain extent, has been holding up. Delhi has been holding up to a large extent. And even the registrations at Bangalore have been holding up. So it's steady state at this point of time. But whether they can replicate the success that they saw in the latter part of the COVID wave, I think there will be numbers to justify that. The second element, obviously, is that stamp duty rates across have gone higher. Interest rates are on an upward trajectory as well. So I think the cost of owning a house is definitely going to become more dear or more expensive at this point of time. And therefore, I think with the kind of rates that are happening specifically in the MMR region at this point of time, a few of the properties have been outliers, Nigel. So I think if you look at a few launches by DLF as an example, the Godrej launch in Pune, which got a tremendous response, and a few responses in the south of the country as well. I think it should be stable at this point of time, but my own sense is that a large part in terms of earnings have been gestated by the stock. When it comes to the other part of the space as well, the real estate proxy plays like plyboards, laminate, so on and so forth, you've definitely seen input cost eat into their margins in this quarter. Been hearing all the managements and the transcripts as well, including Century, Greenland, all the interviews that we've conducted on the channel as well. I think Q3 might be a resilience and Q4 might be a comeback quarter for these players as well. So I think if I have to place it from a placement perspective on the O'Neill lens, I think the proxy plays, the leadership stocks in the plywood laminate space look better off at this point of time compared to the core real estate.
All right, take that point. While we discuss our dream homes, etc., let's come back a little to reality. Talk about something that we can't do without. It's medicines. In an insipid market, the one stock that has done extremely well today is Suven Life. That's because they've announced randomization of the first patients in the phase 3 global trials for a dementia drug. Ekta joins us to give us more detail on this and what it actually means for Suven Life going forward. Ekta.
Well, it's definitely a positive or a step in the right direction when it comes to Suven Life. So I'll just give you a background. This particular molecule, so Suven Life is an R&D company. They have molecules which are under study for various different conditions. And they have this particular molecule, SUVN502, which they have been studying in the past. They had studied it for Alzheimer's, but it failed to meet the endpoint. It did not, it wasn't successful in treating Alzheimer's. So now the company is studying SUVN502 for agitation in patients who have dementia with Alzheimer's. So what has taken place is that now they've recruited their first patient in the phase 3 global trials. It is going to be conducted in North America as well as Europe, over 350 odd patients. Now the results will only be out by 2025. So it's going to take a longer period of time to get the results when it comes to this particular molecule. If it does, then it would be very successful. The management did tell us that, we haven't seen a drug for Alzheimer's all the way back since 2003. So it is a huge unmet need, and there's a huge potential for this particular condition globally. Now they will be spending around $35 million. They have the funds to spend on it, and if it comes to an out-licensing deal, the company is not that keen on it. They said that basically the potential for out-licensing in a CNS molecule, which is basically used for central nervous system such as conditions such as Alzheimer's, is not that high. People like to see results before they put in money. So there is hopeful potential that maybe it could probably see success when it comes to treating agitation for patients who have Alzheimer's and dementia.
All right, thanks very much, Ekta, for that. By the way, the market has taken a knock, right?
Yeah.
I mean, 75 points lower on the Nifty, and the intraday will tell you the story. And across the board, most things have come off quite a bit. So just these intradays, HDFC and HDFC Bank first up, between the both of them, that's some 30 index points straight away. And this is last 10 minutes or so of cuts. Mahindra & Mahindra has sold off sharply. That is another one which I think is a pretty sharp slide on M&M. The intraday, I think, is the one to look at. And then you've got Kotak, Maruti. Everything has come off, but I think it's led by these three names, the HDFC Twins and Mahindra at the margin doing some damage. 85 points now. So now this is turning into a more pronounced kind of a fall. So just about 18,300 back in that zone as we wind down today's session. 16 minutes to go for close. Now, the semi-annual review announcement of this changes to the sensex is due on the 18th of December. I think there are some changes due for the FTSE index as well. Vivek is here to tell us about the key expectations. Vivek, over to you.
Well, that's right. So two announcements are expected tomorrow, both on the Sensex, the semi-annual index review, and also for the FTSE. So when it comes to the Sensex, what IIFL Alternative Research is predicting is that there's a chance that you may see Tata Motors come into the Sensex at the expense of Dr. Reddy's, and along with Tata Motors, you may also see the inclusion of Tata Motors DVR. So we've had precedents in the past where there have been more than 30 constituents in the Sensex. Earlier, we also had 51 constituents in the Nifty, and it was due to the presence of both Tata Motors and Tata Motors DVR. So what are the likely inflows that could happen in case Tata Motors comes in? IIFL estimates an inflow of close to $150 million, and Tata Motors DVR may see close to $23 million of inflow. On the other hand, Dr. Reddy's is likely to see an outflow of close to $113 million. Now, there's also an other outside possibility of Adani Enterprises getting into the Sensex. So in that case, Tata Motors won't come in. Now, the reason for this is that, the Sensex committee sometimes actually sees if one particular segment is underrepresented. And in that case, Adani Enterprises could make the cut. If that happens, it may see an inflow of close to $190 million. Now, coming to the FTSE this time around, no big bang announcements are expected. It's mainly going to be an inclusion of the IPO candidates and the spin-off candidates. So Delivery is the stock that is expected to get included in the all-world index and likely to see flows of close to $16 million.
Take that point, Vivek. Just a word on the market once again. The fact that the Nifty is now below that 18,350 mark, sitting with a cut of almost 80 points. We have the 18,350 put, which comes into play. Nigel, at the start of the show, alluded to there being almost 1 crore shares added in open interest there. A lot of them are actually now unwinding their position. So the 18,350 put now has just about 56 lakh shares now on the open interest. So 50 lakh of them have actually unwound their positions. So if this continues, then the remainder 50 lakh also will have to go ahead and unwind their positions. We have an open interest of almost 91 lakh shares out there. So it's an important place to watch out for the market.
We have made a low Mangalam of around 18,320 approximately. And quickly we've seen a bit of a bounce from there. So it seems that there's the fight zone. 18,330, 18,200, 325 or thereabouts. So let's see whether or not we can hold out. But otherwise, getting into the final hour of trade, the positioning was such that you were expecting that 18,350 to get defended. The very fact we're trading below that level makes the final 12-13 minutes very, very exciting. So we'll slip into a short break. You come back, we'll track market close for you. Let's see which way this expiry is going to swing.
Hello everyone, I'm Ramesh Damani, requesting you to catch a very special episode of Wizards of the Street, where for the next 2 weeks, we are remembering Rakesh Jhunjhunwala. The story of his life is the history of modern Dalal Street. Catch it all on Wizards, only on CNBC-TV18.
Well, if you're looking at the market for the next 9 minutes, if the bulls and bears are fighting for a level, it could perhaps be the 18,350 straddle. But now as well, it seems like the decline, it continues. It's below that 18,320 mark. It's actually virtually at the low point of trade. So, well, 18,300 put, that one too is now extremely active in trade as we speak. We are seeing some bit of shedding in open interest on that counter as well. It's all happening. Basically, it is classic Thursday expiry moves that are taking place. Up until now, towards the last 20 minutes of trade, we would see the market move higher. But now this time around, perhaps the market has chosen to surprise us on the downside. As we speak, the Nifty Bank is also down 136 points. The Nifty, of course, down over 405 points from the highs. A bunch of stocks which are not doing too well. Prashant did mention HDFC and M&M. We have Titan, which has moved to the low point of trade, and giving it company. Actually, L&T too has moved off highs, which is a slightly more weightier stock than the others that we have. Maruti Suzuki is the other one which has moved lower too. Just keep an eye out on the market. But as we speak about the market itself, let's also hear in some opinion coming in. Tahir Bacha of Invesco Mutual Fund had to speak about his sectoral bets, and this is what he had to say.
Earnings expectations have actually perhaps not been kind of beaten in this particular quarter's earnings. I think we've just about managed to clear the finishing line, and probably we've seen a marginal upgrade as far as the large caps or the Nifty kind of earnings is concerned, probably helped by some of the larger banks, if at all. But broadly, the entire mid and small cap space on an average seems to have probably somewhat disappointed compared to what the expectations were at the start of the season. I think it's been a decent result season, but it's not necessarily led to a scenario where we would probably hope for significant upgrades from here on. Banks are still one place where probably you might still argue for a little bit of upside, and particularly maybe some upgrades in terms of earnings as well. Going forward, if let's say credit growth continues to maintain its momentum. There is, of course, on the other hand, the flip side is that we need to see deposit growth also catch up, and we need to probably focus more on the banks who can manage the overall liability situation, the liquidity situation much better than some others. So I think we need to make our choices within that space. But in general, I think that is one of the sectors where top line probably can still deliver some positive surprises. We saw some of that even evidenced in the last quarter's earnings. So I think that is still a sector where we can probably stay a lot more constructive.
Okay, all right. Well, let's focus on Equitas Small Finance Bank. Remember, we had a news flash that came up for you on the screen that DSP, they've been given the nod for 10% stake. Abhishek joins in to run us through the details about this and how he's reading it. Abhishek.
Well, Nigel, as you mentioned, this approval has come. However, just to alert our viewers, currently DSP Investment Managers do own about 8.5% in the parent company, that is Equitas Holdings. So post-merger, this holding, as per the swap ratio of 231 shares of Equitas Bank for every 100 shares that you hold in Equitas Holding, will be around 6% post the merger, about about 6.04% as per my calculation in Equitas Bank. So for any stake above 5%, you need RBI approval for a bank. Hence, RBI has approved up to 10% or 9.99% stake for DSP to be in the bank. In case of future fundraise also, DSP can participate as and when need be up to the 10% level. Back to you.
That point, Abhishek, thanks a lot for clarifying. So basically, it is no fresh capital coming in. It is the RBI approval coming in for DSP's stake in the combined entity, which will post-merger be over 5%, for which they needed the RBI approval to come by. Nevertheless, these stocks are doing okay in trade today. In fact, Equitas SFB is up almost 5% odd. Mayuresh Joshi is still with us. Mayuresh, what do you make of Equitas and Equitas Small Finance Bank? A merger is impending. Is there an opportunity here?
So yeah, as Abhishek pointed out, Mandalam, I think the evidence is here in terms of the price move that you've seen, and obviously it's sentimentally positive. Two things, I think, from a core numbers perspective, what they probably delivered a couple of quarters back, the management probably expects credit cost to settle in that range between 1.25 to 1.5% versus 2.5% in FY22. Second element, obviously, is that the retail deposits have inched up significantly, almost 75 and more than that, as a percentage of their overall liabilities. And the overall CASA ratio is around 52%. So I think as slippages come down from the restructured book, and as credit costs settle down, I think it should start reflecting in better numbers. The only risk factors are that the PCR probably remains extremely low at this point of time, around 45%. And the SME pool, both 1 and 2, is more than 4%. So lots of ifs and buts. So I think maybe sentimental reactions to the stock, but sticking with the larger private banks would make far better sense.
Mayuresh, we'll leave it there. Thank you very much for your time. Good speaking with you as always here on Closing Bell. We'll end with the move being on the downside. So no rescue, late moves coming through. Just 85, not just, but 85 points lower. 18,325 is where the market will end at, around where the market will end at. And bulk of this move coming in, post 3 p.m. So that's a sharp cut we are looking at. The banks index, the bank nifty, I think we should just take a quick look. It's down 0.25%, but will end just 0.2% lower. Off the highs by quite a bit. Autos, I mean, apart from banks, autos, IT and consumers are sectors which sold off. So the maximum under pressure. PSU banks, perhaps the only lone large sector which was higher by 0.5%. HDFC and HDFC Bank were big reasons why there was pressure. There was Mahindra & Mahindra, there was Titan. Tata Motors recovered and then sold off again in the last hour. There were a few gainers as well. Tata Consumer, Adani Enterprises and L&T. Actually, only 3 names on the Nifty with gains of over 1%. But overwhelmingly, even on the Nifty, you had almost about 35 stocks which were lower. Market breadth in the broader space was also negative today. Nigel.
Well, actually, but from the broader markets, there were some select gainers that did pretty well. Union Bank continues its dream run, was up closer to 6.5%. Shriram Transport, their NCLT nod and their effective record date as well for the merger did come out. So that stock ended with a gain of around 3.5%, though it came off a little bit from the top. NBCC, well, that one was up closer around 5% by the time we wound up. But otherwise, there were more number of losers than gainers, so there'll be plenty of stocks that were under pressure. Hindustan Copper, well, valuation-wise, the stock looks expensive. We had a bit of a crack in, base metal prices overnight, so that stock reacted as well, was down 5%. Info Edge, that one, in fact, did come in for some selling today. India Cements saw a bit of a pullback. It ran up to around 260, but from there, again, it's taken a bit of a knock. Dixon Technologies as well was under some pressure in trade today. Though from the broader markets, well, there were a few stocks that did pretty well in trade. You had Genus International, they won an order, to execute an order. So with regard to mapping, so Genus was up closer around 5% odd. The volumes out there were higher than normal. On the flip side, Paytm, that one was down 10%. You had a couple of other names. PC Jeweler was locked in lower circuit with a cut of around 5%. And Axis Cades as well did go home with a loss of closer around 5% or thereabouts. So it was that sort of a day. Well, the Nifty dipped in the last 60 minutes or so. For majority of the trading session, it was quite a boring session. But otherwise, from the lows, we did see a bit of a recovery towards the end of close. Though on a closing basis, the Nifty will end closer around that 18,350 odd mark. The Nifty Bank as well goes on with a cut of closer around 100 points. and the mid-cap index ending with a cut of around 0.5%. And that's been a bit of a worry in the last few days. The breadth of the market hasn't been great. Well, we'll wrap up on this edition of Closing Bell, but on the other side, you don't want to miss this. Big deal is lined up.